Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Here we are on our dashboard, which is filling out rather nicely. Way to go, Fjord. Nothing really new to report. We're working towards getting signaling engines and stuff up and running, but I think the breadth information alone is pretty valuable. You can sort of see that we're getting a little bit tired up here. And I did notice out of the gate this morning, we got nasty triple top failures on things like the Russell 2000. So the smaller cap stocks are feeling the weight of this market. And actually, we had our TRISOF meeting last night. And disregard, these comments. They're a little bit old. I haven't updated this chart in a while. But our sort of general thesis coming out of last night's meeting is we're basically stuck in a trading range with the small cap market, something along those lines. And until we resolve this range, probably a lot of malaise out of our sort of TRISOF portfolios. Did get a nice little pop-up, like I said, of late. This was a bit of a surprise coming out of October. Ironically enough, if we looked at our dashboard, we would have seen this signal, but we didn't have that information at that point. But nonetheless, I think the market for smaller caps looking a little bit heavy. We haven't broken down per se here, but heavy nonetheless. If we look at things like breadth, you can see new 52-week highs kind of waning. Put call ratio, we're actually seeing some puts come back into the market, some put buying after that euphoric peak. And we can see advanced decline line looking a little heavy. Like I said, the small cap stocks, that's an index of 2,000 stocks. They're the ones weighing on this market right now, not the big caps. We often talk about the VIX index when it gets down into these single digits. And actually, level 3ers, if you are watching this later on, remember our VIX options study. Remember we had said that there was super vested interest to keep this thing above 11. So not a big surprise we're sitting here up at 13 and change, but they also want to make sure to keep it below 16. So in essence, what's fascinating is the derivatives people are actually finessing the emotional response out of the public. And we had sort of some sort of public fear events news-wise coming into the market today. We haven't heard Mr. Powell. Are you still there? No, I'm gone. Sorry. We haven't heard Mr. Powell talk in a while. So he was chatting in front of Congress on the economic outlook. That was a really interesting speech of his and Q&A session. And actually, I got the impression that he was actually trying to give an upbeat tone to the market. But I think probably more importantly, that's going to dominate things for the next little while. We have Mr. Trump's very public presentation. Feels like it's a bit of grandstanding by the Democratic Party here. It's a what do they call it? A fishing expedition on their part at this point. It's going to be lots of publicity, and of course they're looking for the smoking gun. If they can somehow find a smoking gun, then Mr. Trump's in trouble. As it stands right now, my impression of this is the senators who actually vote on impeachment have said this is really a waste of our time, and I don't think it's going to gain traction. If they can find the smoking gun, then Mr. Trump's got some trouble. So out of the gate, we saw, with the potential of Mr. Powell throwing a bucket of water on the market, with the opening up of this congressional event, White House impeachment hearings, we saw that the stock market opened up violently lower, sort of risk off kind of bets coming into the market, risk on being taken off. Mr. Powell spoke, and like I said, the tone of his speech I thought was relatively positive. At any point in time in these congressional hearings on Mr. Trump, we could get a bombshell. But I'm getting the impression that really nothing of significance has happened here, and so as a result, the market has worked its way back up. So, We actually spent a lot of time in the daily brief just talking about when we first turned the machine on this morning, we had a polite M coming in here on risk on stocks, and we had an M working on oil. And you can see how through the morning that sort of fear in those two asset proxies has been taken away, and they're actually pressing higher. We had talked yesterday, I remember specifically talking about looking for some back and forth out of the yen here. And you can see that the risk off proxies are all catching a nice bid, which we had sort of talked about, that the odds of that happening seemed fairly high. And spent a bunch of time in the daily brief talking about my anticipated sort of tag of 38.2s here on the gold, and things were getting just a little bit overdone to the downside. So we have a nice update here. You can see the fractal that's potentially forming here. If the fractal does fire, then I think we've got legs to work our way up into resistance and trend lines. But you can even see with Mr. Powell's testimony and now the congressional sort of circus underway, that sort of, oh my God, panic, fear is coming out of price now, and things are calming down here a little bit. This is not a buy signal just yet. The fractal does have to fire, and my hunch is if we drill down to lower time frames, say like an hourly chart, oh gee whiz, you can see that as we're coming up into resistance, you can see a potential top is coming in here. We could very easily roll right back over here. So not really, calling the bottom just yet on the risk off proxies, but also too, let's keep in mind seasonality. Usually the gold and the silver like to bottom here the end of October, beginning of November. So I'm also thinking about that as well. And then also too, the buy when it snows, sell when it goes kind of scenario. And usually that seasonal rally actually goes right up into sort of early to mid-January, and even in silver's case into February. So I am looking for some sort of turn here. And like I said, this has been one directional for quite a while. So that's sort of the risk on, risk off kind of conversation. Risk on potentially was getting toppy there. And we do see some trouble in the small cap and breadth of the market. But for the time being, there is no sort of outright failure here, either on stocks or crude. But like I said, looking a little iffy. And then the risk off, catching a bit of a bid. Bonds are working higher, yen's working higher, gold's working higher. Still in the context of these massive M's. So I'm still thinking sort of dead cat bouncy. At the same time, too, I have been watching the gold, and the gold has been operating a heck of a lot better than either bonds or yen, no doubt about it. And we had a really interesting conversation. We talked at length, of course, U.S. dollar. You can see top of the range, bottom of the range. We're right in the middle, so get ready for some wild gyrations in here. And I don't really have any kind of trading per se, trade levels set up here. But we did have an interesting conversation today in the daily brief about, well, at least maybe I had it with myself. I don't know whether anybody else was interested. But through Fed Chairman Powell's speech, he did make direct reference, and it's too bad it's gone now, but he did make direct reference to how the Fed was trying to reduce the balance sheet through the spring and the summer. And we did see, of course, a lot of risk off proxies sort of cool down. Then through the latter part of the summer, the credit market started seizing up. And I think that, in essence, was things like, these sort of parabolic moves. I think the market actually saw that seizing up happening. Then the Fed basically said, we are going to start loosening up instead of reducing the balance sheet. It's great. Our CTO on the site is watching the Fed balance sheet every Monday. He gives us a report on how it's doing. And yes, indeed, the Fed balance sheet has expanded. And in a weird sort of way, I think that actually the market itself is actually this rally that you see here actually in the bonds and in gold, I think was actually the market saw that seizing up in the credit market coming. That to a certain degree has been eluded, and interestingly enough, Fed Chairman Powell even said in his testimony today, this is actually more technical rather than affecting the economy itself. And he didn't have a big concern about it. If the Fed needed to go back in and provide liquidity, it can. And it did just do that through the last couple months. And I think that's one reason why you see the bond market and the gold market sort of calming down a little bit here. So, I'm going to actually go back and watch his testimony. Now, of course, that's backward looking. Is the credit market actually happy? And he said, no, we are prepared to act if we need to act, and they are expanding their balance sheet. So let's listen to the gold market. And like I said, the gold market itself is actually, of the three risk-off proxies, it's actually, in my opinion, behaved the best out of all of these three. We might be setting up that seasonal bottom, that seasonal base. I think it's a bit early on the gold bullion price. But I, of course, like to watch the stocks because I think stocks always are the ultimate leading indicator in any commodity. And you notice, we've drawn downtrend lines off of the XAU, gold and silver index. You notice the W's on the other side of trend lines. The GDX is specific, and I think this has more to do with silver, but GDX is primarily gold stocks. You can see how it's fighting right at its downtrend line. We'd like to see a W on the other side of the trend line, please. But the area of the market that actually has got my attention right now, and this is sort of the whole point why I wanted to bring this to your attention, is I really kind of like the junior gold stock indexes right now. Again, you can see the downtrend line. You can see how we've broken out. And notice how we came back down and kissed that trend line from the other side. And now we're dead cat bouncing. So, can we W out here? If I start seeing W action on the other side of this trend line, I'm going to get really interested in the juniors. And so here's sort of an example of like a medium tier. I'm not going to say it's light. It's not really overly heavy. But it is a stock that I'm very interested in as a good sort of proxy of this sort of mid-tier gold space. And notice this is his Alio gold. We've been following it on the site for a long time now. It was first brought to our attention by one of our students through our VCIM meetings that we used to have. But hopefully everybody can see now. Great little reload zone pullback against the original lows. And gee whiz, look at the W that's trying to form here. And then what's really cool about this is you can see reload zone within reload zone. So the really slick traders are actually starting to hunt longs even now as we speak. I think on balance, I'm going to wait for this range to resolve itself. I'd like to see a nice close up here. And of course, you've seen lots of charts from me of recent. Do I like W's? Of course, Brian likes W's. So, interesting development happening here within the gold stock space. And ironically enough, I've been very bearish, very uncomfortable, very negative towards the gold space, basically through the end of the summer. And now, actually, I can start thinking about, okay, well, maybe we're going to hit seasonal bottoms. I've talked a lot here, and this is supposed to be just a summary video, so I won't go into it, but there's lots of conversations we can have about things like Barrick and stuff like that, that also sort of lead me to believe, which we did talk about in the daily brief, that we're pretty close to some sort of pivot in the market here. I'll finish off today's broadcast. Again, more sort of signs of pivot. Gotta tell you, man, hopefully you are seeing, and women, sorry, not sexist, hopefully you're seeing a reoccurring theme here across a lot of the altcoin space. And I've told you about this Wabi before. Beautiful W. Just fall in love with this W. It's so pretty. A picture says 1,000 words. Reload zones. This is what I want to see out of that gold stock. Right? But the point here is, these charts are really setting up prettily here. This Wabi here does have a nice solid weekly W working. I love it. I've been interested in this auger, and I've got bids working. And hopefully you see the reoccurring W's off higher time frames that are coming in. I like the idea of taking shots in here on altcoins at these levels, and some of the more mature names, right? Maybe the shitcoins, leave them alone for now. But if you can find a half decent story, it's in maybe, let's say, the top 100 cryptocurrencies on CoinMarketCap, that kind of screening, just keep it really simple. Man, there's some really interesting levels coming in here. I'm hearing a lot of chatter, a lot of requests on these videos about me doing up studies on things like NEO. For whatever it's worth, just for the purpose of this video, hopefully you can see reload zones, nice tests of bottoms, original W's through last November, December, when everything that had any value in crypto started to turn back up. Big rallies that produced doubles for people who bought these W's, excuse me. And now, nice polite reloads. And in a weird sort of way, this is our analogy of working multiple cars. If you did happen to buy this W at $9-10, you could sell half of it on a double at 20. Then take that original capital, go buy back at the reload zone, risk against the lows, turns back up. And interesting enough, let's say you just even bought this 78.6, it's at 8 and change, so that means you want to see 16 to get another double. And I actually get the feeling that we're actually going to AB equals CD our way up into this level. You can see all these trap bulls up here. That's actually where I think this market wants to go, and that's going to confirm, of course, a big honkin' weekly W. This is just yet another example. There's another one here. Actually, I think through the daily brief, we really dug into this NEO because I just wanted all the site members to have a pretty good level or idea of the levels that I'm watching there. Let's see if I can find it. So we had a long conversation about different market participants, levels off of higher time frames. Where am I looking for markets to rally into? And then we even said, okay, well, if you are a lower time frame player, how does that trade look? And I actually think that there's a nice lower time frame setup. I did see people tweeting this out, so the message is getting out. Total bullish bot. You can see the beautiful structure off the 25 level, so it's just working away. And gee whiz, up into that $17 area. Like we said, 78.6, nanny nibbles, reloads, second cars, all that kind of fun conversation. We used to have so much fun talking about a couple years ago. Then this whole space has gone quiet for a couple years. I got a funny feeling we're getting right back into that kind of conversation again. So, strap on your seatbelts, crypto enthusiasts. Actually, you want to see a really cool tweet that I put out here today, which I think totally, I swear, Pluto, Saturn cross. Look at this. This is so cool. Look at that they cross. And then watch how they cross again, right? I mean, this is so cool. There's something mystical about all that. But notice, here we come. Pluto-Saturn cross, which is supposed to be the changer of financial assets in your future for the old system and bringing in the new system. I got a funny feeling the market's setting us up here, folks. So get ready. Anyway, really cool message. You can see right across the board some really cool trading ranges coming in on crypto. Okay, I think I'm going to leave it at that. I have no idea how long I've been, but got to head off and teach a class now. So have yourselves a great day, everybody. All the best, and bye for now.